satisfied, let us know and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good, Lewis. We're going to switch gears here, and we'll cover the heating oil and the crude oil here in just a little bit, but I wanted to update here on this infamous trade of the year. As you can see here, a couple of weeks ago, we thought someone asked the question, why don't we do this? And I said, well, this looked like one that might work. And it did work. At one time, it was up several thousand, well, about $3,000. And now it's come down quite a bit, and it's in trouble. And so we're going to be exiting that if we're not already exiting it. So hold on one second. I want to show you where we are. Here was the first sign that the coffee was in trouble, folks. This is a shorter term time frame, but you're going to see that old infamous 382 pop its head up yesterday. And you'll notice here that this is what's been happening now, that we've made this level. Now this means that this A, B, C, D is in vogue. So that means we're going to be going down to where we originally bought it, down there at 155. So you got to be out of this at break even, folks. You do not want to let this go to a loss. That's no-no in the words of the old cowboy saying you don't want to have a product that made a lot of money at one time and now it's going to be breaking even. That part's okay, but you don't want it to go to a loss. We don't know whether these things are going to go up big time or not go up big time, but what we do want to know is we know that we don't want to stand in front of it if it's going to keep going lower and lower. So that's where we are right now in the crude oil. We're breaking down quite a bit. Now, as I break this up a little bit more, we're going to be looking at the hourly chart here. Thanks to one of our listeners down there in Clearwater, Florida, Miss Michelle Crenshaw sent this nice chart to me showing you that this is what we're looking at here in the coffee. There's the 382 that we had just the other day. There's the one we have today. And as you can see how we're heading down here to much lower prices, and that would get us down. This level right here is pretty much where we bought it, so it can't get below that. And that's the main thing that you've got to be watching. So 155 is what we call the fail-safe mechanism on this. You don't want it to get in the any lower than that, because then you'll be losing, and you don't like to lose on the trade of the years. I haven't done these for years, and I'm not going to be doing them after this one either, but I thought we'd walk through the process of seeing what's going on. And also, folks, we've got another market that is going absolutely wacko today. Let me get this up here today and show you the crude oil market. I want you to see this because really, you talk about volatility in the middle of December or early December. Look at this, folks. You know, we got a $4,500 move to the upside and a $5,000 move to the downside. And look, it stops right at the 382 retracement. Now, you know, we believe in 382 because we see it work about 62% of the time. Repeat that, Larry. It works about 62% of the time. The rest of the time, it doesn't work. So that's why you got to stand aside when it doesn't work. And that's pretty much it. Now, today, I just happened to see it being updated here just a minute ago, and you're going to be able to see that this time it was set right where it should have been, and it was actually doing pretty well. You can see it's already broken $1 a barrel from that 382 retracement. Now, here's where the pedal meets the metal. We know we've made new lows in crude oil now, because we got below 7,100. The old low was 72.38. Now, let's take a look at the second component of the crude oil market, which when they crack it open, it's cracking process. They get gasoline and heating oil. So we're going to look at heating oil right here. So as we get this up, now this is a daily chart. We're going to break it down here in just a moment to show you where we are. So here's where we are. We're making the big A, B, C, D in heating oil, right? Now, let's take a look at the old calendar up on the wall. Yep, December the 8th, okay? That means we are only 14 days away from, guess what, folks? Winter time. And the winter's strongest seasonal for heating oil is December, January, February. So we got 3 months coming up. We've got an ABCD pattern right here. We've had a higher low than yesterday, and it's still up on the day. It's one of the few of the commodities that happens to be up, other than the the financial stuff. So this is why it's important. Well, what we need to do now, just like we did, with the crude oil, what we want to do is we want to break it down, just like we did in coffee and the crude oil. We want to break it down to a smaller time frame so that we can see what we're looking at. So if you do that, and what we're going to do now, switch this over to a 4-hour chart, which lets you see 5 or 6 weeks. You're going to see these same patterns, only they're going to be looked at under a microscope because it's a 4-hour chart. And you'll see there's the 382 retracement that we made. Now look, see we're completing the ABCD here, right on schedule. We haven't taken out the previous day's lows as of yet. Will we? Well, if we make new lows in crude oil, I would imagine there'll be some sympathetic selling coming into heating oil. So we're at the moment of truth, because anything much below this 1.618 level, folks, is going to tell us that heating oil and crude oil are going to go a lot lower. And if you remember from the newsletter that we have written over the weekend, you'll remember from Sunday we said it looks like crude oil is heading towards $64 to $65 a barrel. And that's well in the context within the seasonal that says, the seasonal pattern says as winter comes, people start to buy more warm things like crude oil and heating oil to warm themselves, and that's where that seasonal will come in. But seasonals fail a lot. So you got to pay very close attention to yourself on watching these. Folks, when seasonals don't work, I mean, let me tell you, they really don't work. And so you've got to be really careful with them. That's why we look at patterns. The patterns tell us where we want to be a buyer, where we want to be a seller. But all these markets are doing is reacting, to some extreme volatility. To stop and think, folks, here it is, the 8th of December, and we've had almost a $10,000 swing in crude oil up and down today, and still going lower as we speak. So pay attention to that. Very, very, very important. Now, my guest today will be an old friend from the Chicago Board of Trade and Chicago Mercantile Exchange, John Person of Person's Planets. I know a lot of you have been around a long time. John he's about 20-some years younger than me, but still going strong. He's been in the business about 30-some years. He's one of the better technicians, especially when it comes to stock indices, because he was on the floor of the Board of Trade when they brought in the Dow Jones, and then he also was at the Merc when they brought in the S&P, and he was there at the NASDAQ too when he was at the Board of Trade. So he really knows this stuff, and he's quite familiar with just about any section of commodity technical analysis, and especially, Fibonacci numbers. He's actually one of the better people looking at that. Not so much Elliott Wave, but he knows Fibonacci numbers and how they operate. So he'll be our guest at the break, and we want to be able to welcome him. Hopefully he'll be a guest on a regular basis, because he's he's very gregarious. He's very, very friendly, and he was known as the second most handsome man on the Chicago Mercantile Exchange floor. And I'm not going to tell you who the most handsome was. I'm going to let you guess on that one, but John was a very, very strong second, I understood. We'll be right back, folks, with John Person of Person's Planets.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we have John Person of Person's Planets on the line today. John, are you there?
Oh, we are here, Larry. Good to hear your voice. Thanks for inviting me on today.
It's good to hear your voice, too, my friend. Listen, well, folks, for those of you that don't know who John is, he's been a friend of mine, and he's been a friend of the markets for many, many years. John, tell us a little bit about your background. I know it, but the folks don't, and so I'm hoping that you'll be able to be a regular guest. So tell the folks part of the experience that you've had, because you've been around for 30 years or more. So tell us how you got started and what you've learned along the way.
Well, I think first thing is I got a job in 1977 at the Chicago Mercantile Exchange as a runner when I was 16. So I'll let everyone figure out the math how old I am now.
Wow.
I did not want to get into trading. I didn't know anything. It was a summer job. Next thing you know, I was an econ major, an economics major. I wanted to get a business law. I wanted to be a lawyer, actually. This was my thing. And anyway, I got long and short of it is I got swooped up by a guy by the name of George Lane. Who,
oh my gosh! Yes,
was looking
stochastics.
He was looking for some. He was looking for some extra help and some guy, and so he offered me to come down and see what he did, and offered to buy me a free lunch. Being a starving college kid, I took him up on the offer. I remember the day specifically. It was the Excelsior Bar and Restaurant in the Insurance Exchange building. I had a Reuben sandwich, and we went up to his office. I saw the monitors, everything. I met his lovely wife, Carrie. I said, "When do I start?" I worked for him for 2 years, went off on my own, went to figure out how to use leverage products on the first option ever introduced in commodities, which were on bonds. Studied the markets and created some indicators, and I'm talking to you. That's the gist of it.
Wow, that's a long way. John, we have a question for one of our listeners, and because you have a lot of experience in this, with the advent of these ETFs over the past 10 or 15 years, do you use those at all in your investing, program?
Absolutely. The answer is, I use not only those, but we also look at, I stopped trading about a year and a half ago, the VXX, which was a leveraged ETF on the volatility index, the VIX. It just became skewed. It became too volatile for volatility, so they stopped trading on it one day. And it just, I think a lot of risk managers stopped using it. But other than that, yes, I use right now, in fact, we'll talk about a chart called XOP, Oil and Gas Exploration
Look at it right
ETF.
now.
And then we also have one of the very few first and most important ETFs was the spiders and the Qs, and we'll talk about the NASDAQ 100 ETF.
Okay, so why don't you go ahead and start out with the XOP, and we'll go from there. How's that?
All right, very good. I've been, if you, on that chart, there's a couple indicators there. The horizontal lines that are red and then green, blue, and orange, those are person's weekly pivot analysis. And there was I believe you have a chart with an arrow on it. It shows on the price chart, based on Friday, November 25th, I believe that week, we generated the following week, you'll see that the red bar was lower than the prior week, and the green bar was lower than the prior week. What that was indicating was a turn in the market that the pivot point analysis using a weekly basis, and a lot of your listeners are probably subscribers or use Thinkorswim. This indicator can be found easily on Thinkorswim, person's pivots. What this did is it indicated that there was a mathematical calculation that the market was rolling over value-wise. And then down below, there's a couple other little indicators that I use. One, we use Joe Granville, which is another technician we lost a few years ago. He's in the great big trading brokers lounge in the sky there with George Lane and a few others. But his indicator, volume, tracks volume trends, and you can clearly see that, back in early November, we were making a new high breakout on very light volume. We would call that a bearish divergence pattern. Seasonally speaking, there's a seasonal trend, I believe it's an orange bar there, and it shows this isn't really the greatest time of the year to be getting involved in energy. And then down below is another trade tool. We use comparative relative strength. It's not a price-based indicator. It's a percent change indicator, and it compares the strength or weakness of an underlying instrument to the S&P 500. And this started to roll over in mid-early November. So as that market was making a new high, we had all kinds of divergence patterns showing up. And I'm still looking for more downside out of energy, which would be kind of like a surprise, because everyone and their brothers and sisters over the last, say, 3 months has been telling you to get long energy. Energy's got great cash flow, and they've been telling you that don't worry about it, and it pays a dividend. And, some of these names that might pay a 3 or 4 or 5% dividend, and that's great, but you got to wait a year to get that 3, 4, 5% dividend. And in the meantime, you might get a 30% correction in the market, so your 5% dividend is not going to do a whole lot. But there's a gap in the market from, people might not see this but on the chart, but I think I hopefully highlighted it. There's a gap down there at about the, I don't know, what do you want to call that, 124, 125 level, and here we are $10 higher than that. So I think structurally speaking, we have an opportunity for a move. We have an opportunity for a move going into January where one can structure, if you're an option trader, like a 130, 120, 115 bear fly spread for like $1.65, and you're targeting the real body of the market to be just slightly where that gap level is. So if it is true that volume precedes price, on balance volume is leading this trend lower. And what's interesting, Larry, is that today, they had this news story about the Keystone Pipeline, which in Nebraska, which something happened to it, supposedly. The market gapped higher and faded quickly. So to me, I think this is more of a, oops, we better take some profits. And he who bought in last in this sector might want to get out or at least use some protection. The last comment I want to make about energy here is one of the most prominent trades that I heard people say was, I like being long Occidental Petroleum because Warren Buffett's in it. The problem with that statement is Warren Buffett also trades. He doesn't send email alerts telling people when he gets out of things, right? So if a lot of wealth managers and investor advisors are getting their clients in Occidental Petroleum because Warren Buffett's in it, I might want to add that it's highly crowded, it's highly I think, over exposed with a lot of investors who may not realize this until it's too late. And that might feed upon itself. Today, by the way, Occidental Petroleum was, again, one of the weaker stocks on the board. It opened higher and immediately was probably one of the first energy stocks to sell off. So that to me is maybe a little dead giveaway that we might see more relative weakness coming out of the energy complex.
Wow, that's really good. John, we've got to pay a few bills here in just a few seconds here, but I'd like for you to stay with us for another segment. I've got a couple of questions here that people have already sent in.
Larry,
I want to be able to do that.
Man.
I know that. Hey, listen, one of the things is towards the end of the show here, I want to let the persons know how you get back to reach you. But John, these are these pivot points. These are the ones that were available on the floor of the exchange. You used to sell those, didn't you, when you were on the floor there? I mean, people bought those every week. I remember that.
Did this. Well, I didn't create pivots and I didn't create moving averages, but what I did to create the indicator was I combined a moving average with the pivots. And when we had a short-term pivot point below a higher time frame pivot point, it gave us a structural value change. And that's why these are targeting lower highs and lower lows as the market changes. So,
okay. Hey, stay with us, John. We'll be back in a few minutes. We got to pay a few bills for TFNN. They have to eat too. Hey, we'll be right back, folks, with John Person, a Person's Planet. So we'll be right back, John. Hang in there, buddy.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, talking with John Person. John, the question that I have for you is you've got the chart of the QQQ This is basically the NASDAQ. Is that correct?
True, correct. This is the NASDAQ 100 best of breed.
And that is an ETF. Is that correct?
Correct, yes.
Okay, because I only do futures.
Sectors. Yeah, this would be, the stocks in the queues would be, Costco, which has earnings out tonight. You've got, a couple, I think American Airlines is in there. You've got a couple Chevrons in there. But mainly it's biotech and technology with the heads of the 5 families, such as your Apple, Google, et cetera, et cetera.
Okay.
What this chart shows me, it's got a couple things so people can understand. This has got a different time frame instead of weekly pivots. This is monthly. This is the person's monthly pivot. What's really interesting about this is it's projecting a higher low and a higher high for this month of December. Technically speaking, there's a couple things that when I trade stock indices, I look at what's called the advanced decline or the breadth. Down below in the middle section, it says ADCHND. That's the advanced decline comp ratio line for the NASDAQ. It's not all that promisingly. It's more neutral right now. The market sold off for the last 4 days, so it shows a breakdown in the breadth. Stochastics is in the bottom lower quadrant, and it's getting near oversold. The fourth indicator down there is the volume. So, Larry, you probably remember some of my work. It wasn't just price-based, it was condition-based. So if you're trading an index, I want to know what the advanced decline comp ratio lines are like. I want to know what the volume condition is. The volume condition on the sell-off for the last 4 days has been extremely light, as measured with OBV. What I'm interested in is to see if, like today, we're having a reversal off yesterday's indication and it's holding at pivot support. If oil comes in, Fed Chairman Jay Powell says, yeah, we're going to hold off. And if he says anything close to what he said at the Brookings Institute, which was, these interest rates, we need to see, how they're going to affect the economy. If he says anything like that, we're going to get a Santa Claus rally, which would be surprising because the market is set up so bearish about a recession, inverted yield curve. And technically speaking, it's not that bad. It's neutral at this point, but I think it would not surprise me, and I'm positioned for an end-of-year upside rally to fill a gap that was left back in September in the NASDAQ. The most hated stocks in the world got to be Amazon, got to be some of the high-tech names, your Apple, for example. So nobody's really interested in technology or software application stocks because they all think the Fed's the interest rates are going to just destroy the economy. And I think while that is still to be seen next year, in the first Q next year, I think we could see a surprise relief rally that would surprise a lot of people. And that's what this indicator is setting up for.
Well, it certainly looks interesting when you look at the NASDAQ, how weak it's been compared to the others. I mean, it's just been like a totally different market.
No doubt.
It is. Yeah, that's for sure. Listen,
what do you think?
We're going to have you on again soon. John, one other question. Years ago, you used to do these what do you call these, cruises where you did teaching and you went to exotic places. Are you ever going to do that again, John? Tell the folks about it. What that was about.
I'll tell you what, if we ever do one again, we had them scheduled and we did, and they were fantastic. And we had some guest people. And I would say we hadn't done one since COVID 2020. We were going to go, I think we had talked a long time ago, to Phuket, Thailand, and go out to Singapore. I'm not quite sure if we're going to do one scheduled for 2023, but I would say that eventually we'll probably get back into that swing of things. Those are really good times.
Yeah, they were very popular, as I recall. It was really good, and actually a few of the people came back alive, as I remember.
Yeah, we did. We didn't kill everyone with Legionnaire's disease or now COVID.
God, we've been friends for a long time. Promise me one thing, that you will never invite me on one of those things, because there's no way you're going to get me on a boat or a ship, either one. Never going to happen.
Now.
So.
These are big. You wouldn't even know the difference. So I guess that would take you. You're not going to come down to Florida and go sport fishing with me, huh?
No. Sport fishing is when I open a can of tuna, buddy. No. We don't do anything like that. Yeah, listen, happy holidays to you and Marion. We'll have you on again after the first of the year, okay?
Wonderful, Larry. Thanks to hear your voice, and thanks for inviting me on it. And I hope your guests at least get a little different eye-opening here and what else is out there in the world.
How do they reach you, John? John, how do they reach you? What's your email address or website?
Our website is personsplanet.com, PersonsPlanet.com. planet.com. www.personsplanet.com.
Thank you so much, my friend, and happy holidays again to both of you, okay?
Merry Christmas, happy holidays to you too as well, Larry. Thank you.
You bet. Okay, folks, John Person, really a fun stand-up guy, known him for a long time. Now, we've had something exciting happen while you folks were on the air here listening to John, and that is that we had a nice little Gartley pattern form in the Dow Jones E-mini, and I want to get this up here so you'll be able to see it. Now, this is a 5-minute chart for those of you that look at 5-minute charts, and I certainly do keep an eye on them. But you'll notice here we had the big ABCD up at the top, and then we had the ABCD down exactly at the 61% retracement, coming off the low in the Dow Jones. And what does that tell us? We might be making a larger ABCD to the upside. And as John Person said, there's a really strong probability of a Santa Claus rally. We've heard this from several people. And so we got to pay close attention to this because the market sold off a bit, this week from where we were last Thursday or Friday, but hasn't really gone down much. That's for sure. So these are things that we're really watching here on a short-term and a long-term basis, especially watching the NASDAQ because that was the leader all the way down, and it might be the leader all the way up. So we're paying very close attention to that NASDAQ. It's still lagging badly today, even though it's up. It's still way behind from where the rest of the markets were because it could barely make a 382 retracement when we shattered the 78% level in the Dow Jones. Now, we're going to have to take a little break here, but before we get here, I want to show you a beautiful pattern that one of our friends from across the pond sent to us from the old city of Bournemouth over there in the United Kingdom. It actually is where Tom Hugard lives. It's not Tom, it's just one of his neighbors. But you'll notice here, this beautiful green triangles that you have here, that's a 135 pattern, folks, lower highs given to us by our boys Bill and Roy Longstreet. And you'll see we've completed the pattern now. So here again, we might be at a major bottom here and getting ready to see if there's going to be a rally. Remember, our target on this S&P on the way down was 39.13. We got to 39.14 on Tuesday. On Wednesday, we got to 39.16, and we're rallying off of that level. So it's beginning to think that we might get a little bit more of a bounce here. Now, we got Friday coming in a week that's been basically down. So it's going to be interesting how that comes up. And then we got getting ready for Christmas holidays these next 2 weeks. And you can see the volatility that we're having now in crude oil, and we'll probably start having it in some other things. Now, we're going to take a break here. When we come back from the break, we're going to talk about something very important that we're all involved in, and that's the Treasury bond market and the Treasury note market. So let's pay attention to that. It's going to be interesting. We'll be right back with Treasury notes and Treasury bonds.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, now if I had a trade of the month, this would be it. This is the Treasury bonds. As you can see here, we're at 8 weeks up. Remember that bottom we had at 117 when nobody wanted bonds? Guess what, boys and girls? Times have changed. Everybody wants bonds now. And we're sitting right at the 50% level at 132. That was the high. We had a high of 130, 131 on Tuesday, 130, 133, 132 even on Wednesday. And here we are on, well, actually it was Tuesday and Wednesday and Thursday. Today was a high also in the middle of the night, very, very shallow. But what's important about this particular move here, and I'm going to bring this up to show you because I don't talk about open interest very much, but this is what I want you to see. Now, this is what's happened to open interest yesterday in the Treasury bond market with the big up move that we had. I want to get up here and show you. Hold on here. Change the windows. And you'll see here, this is right from the Chicago Mercantile sheet. You can get it yourself, CME.com. And you'll notice here that, by golly, we went right down to this level here where the open interest started to drop. Well, prices go higher and open interests go higher. That means that, and the open interest prices up, open interest down means the market is weakening. Okay? And that means that the longs are leaving the market, and that leaves it very vulnerable to the downside. But that's not what's important. What's important is what happened on Fed Day, which was a week, remember on Thursday? Week ago today when we had those monster moves, Treasury bonds up 3 points in one day, and interest rates are going to come down forever. So there's Fed Day. Look at the drop in the open interest. Same thing. This is short covering, folks. When that short covering is over, the market falls of its own weight. So I really like the short side of these bonds, and I would recommend them last night at 130, 116. They're about 10 ticks below that right now, not much of a handle. But my goodness, this chart is set up so perfectly for a move down that it's literally scary. And when I get scared, I usually lose. So make sure you have a stop in there because these patterns only work part of the time. And that's why it's so very, very important. Now, I wanted to bring one other thing to your attention, and that is when we're looking at stock index futures, because we're at a very, very critical level in some of these here today. And I wanted to be able to get it up here for you to see it. And then what the heck did I do with it? I know I had it here, and now it has disappeared on me. Doggone it. I'll find it. Just give me a second here, and we'll get it up here. And there it is. Hold on. Just give me a second, and I will have it ready for us. You can see where we're heading right now. This was covered in the video last night, folks. There it is. You're going to be able to see it. Here's your E-mini S&P, up to date as we speak right now. And remember, our target today was for the S&P to get to 3888. Remember, that was a 382 of this whole move up here. You see how you have a double ABCD pattern here? Just like we were looking at in the Dow Jones just a few minutes ago. Markets rallied over $1,000 since that time, and we're heading towards 3888. Is that going to be the high? I don't know, but guess what else? Nobody else does either. So all we know, when we get up there, we're going to have a double ABCD pattern there at 3888. We're going to be setting at the 382 on the daily from Sunday's high. You got to take a look at that one, boys and girls, because that might be the last train from Gun Hill, because if we don't get above that, we're going to roll right over and head down to our target. And everybody knows what that. Johnny raises his hand and he says 3875 in the E-mini S&P. So this is going to be a real critical day today and tomorrow. 3888. We start closing above 3890, 4,000. That means that things going higher, and we could be looking at Santa coming to the two streets, of Broad and Wall, there in New York City, and there will be a Santa Claus rally if we get above that 4010 level in the S&P. Remember, we had 4110 was the high that we made last Friday after Fed time. Then we made a lower high at 4085. So if we get anywhere near 4065, 4075, it's a strong indication that we're probably going to rally for the Christmas holidays. That's the way it looks right now. And of course, that could change in a heartbeat if somebody says something, somebody shoots something, or somebody does something that nobody's expecting, then these markets could change and go the opposite direction. But that's not the way it's looking right now. It's still got a chance to look like it's going to do something pretty good. Remember, folks, this is what you have to remember. And this is the chart that really means the most. This is the New York Stock Exchange Index chart. You don't trade it, but this is how they value mutual funds. And you'll see the high we made here on Fed Day last Thursday was an exact, to the tick, 61% retracement. And we reversed all of Thursday's and Friday's action, folks. We went below all of those levels. When we went below 39.20, and we got down to 39.13 and 39.16, we were below all those levels, telling us that, yes, this market has a tendency to roll over. And that's what we could be looking at. That's why we're getting this counter trend rally today. And remember, 38.88, you got to watch that one, because if we close above that, first indication, yep, it might be all right. So it's going to be really interesting, how the market moves up. I haven't checked the S&P for quite some time and where it's trading at, but someone just let me know that it was at 39.74. We had a high of 39, well, it's really close to 39.76, he just said. So remember, the high we're looking at today is 39.88. That's a double ABCD. Okay, it's a 382 on the daily, and you can't ask for better than that. Remember, this is only the second day up, because we made our low here on December the 7th. And what is today? December the 8th. This is only a one-day rally, but it's a good one. So you got to pay attention to that, too. Very, very interesting. So these are some of the things that we're watching here to keep things moving along the trail. And we're going to take a little break here in just a few minutes, I believe. I think we got a minute or two. By the way, tomorrow I will not be here. I have a very strongly business meeting tomorrow at noon. Anyway, we'll be back on Monday. And I believe, I forget who my guest is. We were going to have Peter Leides on Friday, but fortunately Peter had something to do and I have something to do. So that's pretty much what we're watching here today. Watch this oil market, folks. There's a chance that it could be bottoming in here. And I say that by just looking at that oil chart, heating oil chart. And not the crude oil, but the heating oil. Watch heating oil, because that might lead us up because of the seasonality that's there. And if you just listen to John Person, there's some things here that tell us that, this may or may not be it. Seasonality being part of it. But I don't trade seasonals. I trade patterns. And that's what I'm looking at, is patterns. I don't care about the seasonal. If it works in my favor, great. If not, nebahachi. Not going to worry about it. So let's remind ourselves of that. It's not how much money you make. It's how much money you don't lose. That's the whole key to this. And the only way you're ever going to be successful in this business to have an absolute foundation of trust in what you do. And boys and girls, that I do. I have a foundation in trust because I've seen it work over and over. We'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I want to get back to the euro for just a second here because we are up against this same 50% retracement now today with the ABCD. In other words, you had these 150-point breaks, but it comes right back and is challenging it again. So my assumption is that we might get ready to make a new high and possibly a breakout. So pay attention to that, because if we get above that 106 level in the euro, this would be a breakout telling us that we're probably going to go a lot higher. But right now, as we approach that 105.70 level, that's only 30 pip difference between the two. So watch it closely because it's taken 8 days to get here, and here's where we are again. So we covered the short here just yesterday and right near the lows when it was making a 382 retracement. We locked in well over $1,200 in the euro and $1,500 in the British pound. We didn't do both. I gave you the choice whether you wanted to do one or the other, but we traded the euro because it's the larger of the two, and it's the most actively traded thing in the world. So those are the things that over $1 trillion a day they do it, probably even during the holiday season too, because people don't stop spending all over the world and they have to convert their money to dollars most of the time. So that's why it's such an important part of what we trade here in foreign exchange. So remember, folks, have a wonderful weekend. I will not be here tomorrow, as I mentioned several times, and it's one of the fun days that we have here. These Friday, Saturday, and Sunday. It's really 3 days of really helping out the kids and having some fun ourselves. So we'll have some fun here. We'll see you on Monday, of course. And so live every day in an attitude of gratitude, and may God bless, and try to do something nice for some of your people on the street or whatever it is. Do something nice for folks. We're lucky. We're blessed with a lot of things. So share the wealth. Doesn't have to be a lot, but whatever little bit you have would help somebody else. So remember to do that. We'll see you on the flip side.
Building